Hello guys, welcome everybody in the third session. In the third session, we are talking from the patterns. We are fixing the Fibonacci levels, and after we are talking from the patterns together with the Fibonacci levels. So let's start. Everybody know on the charts we can find everywhere patterns. We can find flag patterns, we can find double top, head and shoulder, double bottom, and inverse head and shoulder. The first important things, when we have bullish market and we have bearish market. When we are on the bearish market and we are looking the price continue to the downside, we are looking the W patterns and we are looking to go long short. We have three type of Ws. So we are on the bearish market, we're looking the W patterns. The first one is the bearish W. We have high, we have low, we have lower high, after we have lower low, and after we have the other lower high. And we have a red line, the red line is the trend line. So when the last leg connecting with the trend line and it's create the lower high, the price continue to the downside. So this is the bearish W. The second W is the bullish W. When you have high, you have lows, you have a middle, the last leg is squeezed to the upside and it's create the low high and it's connecting with the trend line and it's find support resistance zone and the price continue to the downside. This is the bullish W. We have a third one, is the natural W. When you have high, you have lows, you have middle, and after you have a lower high, the lower high it's connecting with the trend line and it's find strong support on and resistance zone, and after the price continue to the downside. We have two trend changing pattern on the bearish market. The two trend changing pattern is the double bottom and the inverse head and shoulder. I have proper definition for the double bottom. So the double bottom for me, when I have a trend line, the price broke the trend line and after it's make the retest on the trend line and it's create same lows. After the price continue to the upside. The inverse head and shoulder, you have left shoulder, you have a head, and after the price broke the trend line and it's make the retest on the trend line and it's create the same lows where you can find the left shoulder on the other side. So the price continue to the upside. Let me repeat again quick. So in the future, when we are looking the price continue to the downside and we are on the bearish market, we are looking the W's. We have three type of W's. The first one is the bearish W. The second one is the bullish W. And the third one is the natural W. The important thing always, we have trend line. When we're looking the bearish market and we are looking the reversal, we are looking the double bottom and the inverse head and shoulder. Okay, let's go on the bullish market. So when we are looking the bullish market is coming from the bottom and going on the top. We are looking the M patterns in the future and we are looking to go long. We have 5 types of M's on the bullish market. The first one is the natural M. You have low, you have higher low, you have highs, and you have middles. The important things, we have trend line, and we have same highs and same lows, and the lows find strong support and resistance on if you look left. This is the natural M. The second one is the big bullish M. So it's BBM. We have low, we have highs, we have middle, and we have high low. The high low, it's connecting with the trend line, and it's find strong support and resistance zone on the left side. So this is the big bullish M. We have the third one is the bullish M. When you have high, after you have high low, so it's the middle, and after you have other high low, and you have highs. The last high low connecting with the trend line, and it's find strong support and resistance zone if you look left, till the price continue to the upside. You have a bearish M, it's a little bit difficult, but we can find bearish M always after the consolidation happen. So you have highs, you have middle, and the last leg, it's close high low, and it's find strong support and resistance zone on the left side, and it's connecting with the trend line after the price continue to the upside. You have simple M when you have a first leg, so you have a low, you have highs, you have the middle, and the last leg it's came back on the same level where the first leg start, and it's connecting with the trend line, and it's find strong support resistance zone as well. We have 2 trend changing patterns on the bullish market. The first one is the double top. The second one is the head and shoulder. Definition for double top, we have trend line. The price broke the trend line. It's make the retest on the trend line, and it's create the highs after the price continue to the downside. The second high, not always on the same level. Sometimes it's closed a little bit higher. We know exactly why, because lots of trader when start to short lower than the previous high start, the market makers push the price a little bit higher because lots of people put the stop loss just tiny bit higher than the previous high. So it's sometimes a little bit close higher than the previous high, but if you have trend line, it's really good confirmation for you catch the perfect entry on the point. We have the other bullish market trend changing pattern is the head and shoulder. We have trend line, we have the left shoulder, we have a head. After the price broke the trend line, make the retest on the trend line, and it's create the right shoulder on the same level where the left shoulder finished. After the price continue to the downside. So let me repeat again. When we are on the bullish market and we are looking the price continue to the upside, we are looking the M patterns in the future. We have 5 type of M patterns. The first one is the natural M. The second one is the big bullish M. The third one is the bullish M. The fourth one is the bearish M. And the fifth one is the simple M. We have 2 trend changing patterns, so 2 reversal pattern on the bullish market. The first one is the double top, and the second one is the head and shoulder. Okay, let's go on the trading view, and let's try to find together M's and W's on the chart. Let's start on the bullish market first. On the bullish market, we are looking the M patterns. Here is the first pattern. Up, down, up, down. Simple M. Up, down, up, down. This is the big bullish M. Up, down, up, down. This is the natural M. Up, down, up, down. We have same highs, same lows. It's again natural M. Let me go on the other pair. And let's go on the smaller time frame. Up, down, up, down. This is the big bullish M. up, down, up, down. Again, this is the big bullish M. Up, down, up, down. This is the bullish M. Up, down, up, down. Again, this is the big bullish M. Up, down, up, down. So we can we can find here small consolidation. So this is the bearish up, down, up, down, up, down, up, down, and it's connecting with the trend line. Okay, so we find all of the patterns on the chart from the M's. So let me try to find reversal pattern. So the two reversal pattern on the bullish market is the double top and the head and shoulder. Up, up. So this is the head and shoulder. The trend line, the price broke this trend line, and after it's make the retest and it's create the right shoulder. We have trend line. Let me check the smaller time frame. So the trend line is break. The price broke the trend line and it's make the retest on the trend line, and it's create the same highs. Price broke the trend line, it's create and make the retest on the trend line, and it's create the same highs. This is the double top after the price reverse up, so it's going on the downside. Okay, let me try to find W's on the bearish market and the trend changing patterns on the bearish market. Down, up, down, up. First pattern on the bearish market is the bearish W. I move it on the side and you can find it in the same. Down, up, down, up. So high, low, lower high, lower low, lower high. High, low, lower high, lower low. And after lower high, after the price, continue to the downside. Here is the other W. Up, down, up. So we have same highs, same lows. So this is the natural W. We have highs, same lows, and same highs. This is the natural W. Here is the next pattern. Down, up, down, up. This is the bearish W. To the bearish W complete, let's create the bullish W. So we have lows, we have middle, and the last leg it squeezed, finds support and resistance zone. We have a lows, middle, and the last leg it squeezed and finds strong support and resistance zone. So this is the bullish W. So the price continued to the downside. And it's create, again, bearish W. Down, up, down, up. Same lows, same highs. So this is the natural W. Down, up, down, up. After we can find bearish W. Up, down, and the price continue to the downside. Okay. So we find all of the bearish W and bullish W and natural W on the chart. Let me check those two reversal pattern. So the first one is the double bottom and the other one is the inverse head and shoulder. If you check the market, down, up, down, up, down. And if you look left, exactly, you can find here the inverse head and shoulder. Okay, so the price broke the trend line, and it's make the retest on the trend line, and it's create the same lows. So this is the double bottom. So a trend line, the price broke the trend line, and it's make the retest on the trend line, and it's create the same lows. This is the double bottom. Down, up, down, up, down. Look left. Exactly. Inverse head and shoulder. Let me try to find the other double bottom in the other place. Trend line is break. Price make the retest on the trend line, and it's create the same lows. So this is the double bottom. So the price broke the trend line, and after it's make the retest on the trend line, and it's create the same lows. So this is the double bottom. Okay. Let me repeat again everything quick. So in the future, when you are looking the chart and you are looking the bearish market and you want to go short, you need to find the W's. We have three type of W's. We have bearish W, bullish W, and natural W. And we have two reversal pattern on the bearish market, is the double bottom and the inverse head and shoulder. When you are on the bullish market and you are looking to go long, you need to find M patterns on the chart. We have five type of M patterns. The first one is the natural M, the second one is the big bullish M, the third one is the bullish M, the fourth one is the bearish M, and the fifth one is the simple M. We have two trend changing patterns on the bullish market. The first one is the double top, and the second one is the head and shoulder. All right, let me fix it. The Fibonacci levels next. Let's move your background. So we just need a nice, smooth, white background. After we select the Fibonacci levels, low to high, and you can find the PDF file in your message. That is the Fibo levels, what we use in the future. So you just need to copy those numbers, and you need to select it the same colors, and after just click on the OK button. So let me make the settings together. The 0 is black, the second one black, the third one black, the fifth one black. The 61.8, it's really important number, so it's red. The 70 is 60, it's blue. The 1 is black, and we use the 1.61.80, so it's black. We not use the 2.68. We need to change the number to minus 0.27, and it's important number, so it's red. The other one is minus 0.68, it's black. And the other one, the other two box, it's for the key level. So the first one is the -1, and the number is pink. And the other one is the 200, so it's 2. And we have one more important level, it's a 1.272, and it's red. We need to change the labels, because when we are using the Fibonacci levels in the future, very important, the left side. So we need to looking back in the past, and if the numbers on the left side, you can find very clear what happened in the past. So we need to change from left to right, and the background we need to move on the right side. Click OK. Excellent job. So at the moment we don't want to use the -1 and the 2 and the 61.80, so we can cancel them and click OK. So those numbers, the important numbers on the future, the -0.68, the -0.27, the 0.23, the 0.32, 0.50, 0.61.80, 0.7861, and the last one is the 1.27 and 2.